3 common lies about volume in trading. So we got to get down on it, as Cool and the gang used to say. All right. What we see here is, first of all, you see price going up. And the first lie is that people say, price will go up on increasing volume because volume is what pushes the market up. Well, look at this. I mean, price is going up and volume is going down. So that is a complete misnomer, complete misunderstanding. The opposite is true. Just like most things in trading, the opposite is always true. And notice if you said, oh no, this isn't sustainable, this uptrend isn't sustainable because volume is decreasing, you would have been 180 degrees wrong, just like most traders are. In fact, have you ever felt that way, that if you just did the opposite of everything you've been taught, you'd probably be a millionaire? Well, there's actually some truth to that. Your subconscious mind is picking up on these patterns. So that's number one. So if that's not what we're going to do, then how are we going to do this? How are we going to make money? So let's go to step number 2. So volume lie, and on the opposite, truth, is that volume can come in on narrow range bars. So this is actually what you want to do. Volume on wide range bars is no bueno, not good. Let me get my glasses out here. I'm old, so I got to use my glasses to really see this now. So again, one of the most common misconceptions is that, what you want is you want big volume on a wide range bar. And that is not the ideal situation. Again, that's what everybody thinks, and of course, everybody is wrong. So that is not ideal. Everybody knows that, and by the time everybody knows anything in trading, it doesn't work anymore. So what we really want, and let me get that off of there, is you want big volume. Now look at this. This is really, really critical. So we've got little differences in volume. For example, you might say, that volume bar there is pretty good. It's not really that high. If you look at the overall volume for months here, a couple of months, it's actually, it's just kind of around average. It's not that big, not that small. Now here we get a big volume bar. All right, now notice that breaks the high of all of these. So now we have significant volume. And we want it on a narrow range bar. Look at how that tiny little narrow range doji comes in there from the high to the low and the open to the close. Negligible. Nothing's going on. But isn't that strange? Wouldn't you expect when there's a lot of volume coming in, this is Apple, so a lot of shares, a lot of money coming into the market, wouldn't you expect the market to actually move? For there to be a lot of price action that day? If you were day trading Apple that day, nothing would have happened. It'd be hard to make money. It was a consolidation day. But all kinds of volume coming in. So people who do scans for high volume days are going to get messed up here. And that's why, again, something that simple is 180 degrees wrong. So what happens after this? And I'm just going to move this ahead bar by bar. Another narrow range bar. Low volume now. Okay. Again, low volume, narrow range bar. And we'll move forward now and down, boom, down she comes. So if we go back and we look at this right here, this big volume day on that tiny little doji, that was the signal of professional trading. And that's when you wanted to go short. Counterintuitive. And that's exactly what the professionals want to do. They want to do what's counterintuitive because they want an edge. They don't want to follow, or they don't want you to follow them. They want to be the leaders. All right. So they're going to do things that are invisible. I call this having an invisible edge. This is the kind of stuff you don't see in normal candlestick pattern books or tutorials. So now what's ironic about this is it's actually been around for a long time. So this is what's called, just to give you a little classic analysis on this, and sometimes classic technical analysis is really great because a lot of people have forgotten about it. This is what's called a squat bar. I did not invent this. Bill Williams came up with this many, many years ago. And sometimes it's these old techniques that now everybody forgot about that are really, really powerful because everybody's looking for something new. Something new. So, oh, well, that old technique doesn't work anymore. And that's beautiful because then when people stop using it, it starts working again. Get my free indicator, which is already hidden in your trading platform that answers the question, where exactly should I enter my trades? Go to entryindicator.com and I'll show you exactly how to use it for precision entries.